Hi there. So today we are going to be working on our final accounts. So up until this point we have looked at the income statement on its own, and then we looked at the statement of financial position, and what we're going to do today is we're going to bring it all together to complete our final accounts. Now in front of you you'll have your exercise 9, and as you can see it's basically all the information for the income statement and statement of financial position, but it's jumbled up together. So our first task will have to be to sort out which item goes where. So if I just get my pen, we start with our opening inventory. Now thinking back to our income statements, we know that this goes in the cost of sales and it's in the income statement. We're now looking at insurance. Now insurance is just an expense that businesses have to pay monthly. So the fact it's an expense means it goes into the income statement. The same can be said for rent. Now what we have here is cash and bank. We know that these are current assets, therefore they must go into the statement of financial position. Now when we have cash and bank, what we actually do is we add them together to give our cash and cash equivalents. So over at the side here, I'm just going to write cash and cash equivalent. We've got our cash that was £80 and we've got our bank at 240. Adding them both together will give you 320 for cash and cash equivalents. Moving on to our purchases, again this is something that comes under the cost of sales, therefore it must be in the income statement. The same can be said for carriage in. Now we have wages here. Wages are something you're having to pay every single day to your employees, therefore it must be an expense, which again puts it in the income statement. Our carriage out, which is, as we know, is just a fancy word for delivery charges, are also an expense, which must put it in the income statement. We have our equity here, which we're going to put OB next to as opening balance, which goes into our statement of financial position. We have our sales revenue here, which again goes into our income statement. It's the very first figure we look at. We have our purchases returns, which again is involved with our cost of sales, which must make it in our income statement. We have our electricity, which is an expense, so again, income statement. We have our furniture, so these are things that we own and we expect it to last a long time, making it a non-current asset, which puts it into the statement of financial position. We have our sales returns, which are what we take away from our sales revenue. We know that our sales revenue are in our income statements, therefore it's an I. We have our advertising, which again is an expense, goes into our income statement. We have our drawings here. Now this is something that's new to statement of financial position, so what we're going to do is put an S next to that just now. We have our motor vehicles, which again is something that we own and we expect it to last a long time, making it a non-current asset. That puts it in the statement of financial position. We have our trade payables, which are people that we owe money to, making this a current liability, and again putting it in our statement of financial position. And we have our bank loan. Now this is a liability again, but we're expecting it to pay it over a certain number of times, maybe like 5 years, 10 years, that sort of thing. So that makes it a non-current liability, which again goes into our statement of financial position. Last but not least, down the very bottom, quite often people miss this just because of how far down it is, we have our closing inventory, which again is involved in our cost of sales, making it income statement. So now that we have worked out where everything goes, we then just need to start with our income statement. I'm going to scroll up to the top to get my template. So just like every income statement, you first have to start with the individual's name, which we see as M Corr, and you write underneath income statement for year ended 31st December year 2, and then you underline it all. Again, you should be using a ruler, I just can't on this iPad system. Then you put your 3 little pound signs at the top. All information comes from the booklet, so please make sure you are reading it thoroughly. We start off with our sales revenue. And our sales revenue is worth £18,300. After we've got our sales revenue down, we're going to take away our sales returns. So these are stuff that people have returned because they don't like it for whatever reason. So we're going to less our sales returns. So 18,300 take away £23 will leave you with £18,277. This is what we call our net sales. Once we've found out our net sales, we're then going to move on to our cost of sales. So I'm going to write here less cost of sales, and because this is a heading, you should underline it with a ruler. And the very first thing that we're going to do is have our opening inventory. So our opening inventory is worth £3,430. Once we've got our opening inventory down, we're going to add our purchases. Our purchases were for £12,624. Now once we've added our purchases, we're going to have to take away our purchase returns. So I'll write here less purchase returns, which was worth £28. So 12,624 take away 28 leaves us with 12,596. Once we've worked it out, what we're having to do is add our carriage in. Our carriage in was worth £15, so adding that on will give us £12,611. We put this in the middle because what we're going to do is we're going to add this to our original opening inventory, which leaves us with £16,041. We've still not completely worked out our cost of sales yet because we've still to take away our closing inventory, which is our stock left over from this year. So our closing inventory was £230 worth. So £16,041 take away 230 will leave us with £15,811, and that's what we officially call our cost of sales. Now what we want to work out is our gross profit. To work out our gross profit, we simply take away our cost of sales from our net sales. So 18,277 take away 15,811 will leave us with £2,466. This is our gross profit, so this is the money that we've made from simply trading. But that we're not finished there. We've still to take away all of our expenses to find out our official profit for the year. So what I'm going to do is going to write less expenses and underline it because it's a heading. The first expense I'm going to put down is our insurance that was worth £25. We have rent that was worth £36. We have our wages that was worth £240. We have our carriage out that was worth £40. We've got our electricity that was worth £34, and we have our advertising that was worth £21. What we're going to do is add up all our total expenses, which comes to £396. And to work out, let me just move this up a wee bit. to work out our official profit for the year, all we have to do is take away our total expenses from our gross profit. So 2,466 take away 396 should leave us with a total of £2,070. That's you completed your income statement for task 9. What we're now going to move on to is our statement of financial position. So again, you always start with the individual's name, so MCOR. And this time you're going to write statement of financial position as at the 31st of December, year 2. And again, you do your pound signs. Now the first thing we're going to do is list all of our non-current assets. And always underline because it's a heading. So we have 2 non-current assets. We have our motor vehicles at £800, and we have our furniture at 2,700. All we have to do is simply add them up to give us a total of £3,500. We're then going to move on to our current assets. Now remember, it's important that you order your current assets in the order of liquidity. So the ones that are the most difficult to turn into cash, you put first, and the ones that are the easiest to turn into cash, you put last. So we have our inventory, which is the most difficult to turn into cash at the top, which gives you 230, and we have our cash and cash equivalents. Which is our cash and bank added together, which gives us £320. Again, we're just going to simply add these up to give us 550 for our total current assets. We're then going to move on to our current liabilities. So I'm going to write here less to remind me to take away, less current liabilities, always underline with a ruler. And we've only got one current liability, which is our trade payables. So I'm going to write here trade payables. And our trade payables were worth £55. So our 55 take away our 550 will leave us with a working equity of 495. Now what we're going to do is we're going to add our 495 to our non-current assets, which gives us a total of 3,995. What we're now going to do is take away our non-current liabilities. And we've only got one non-current liability, which is our bank loan. Our bank loan was worth 400. So 3,995 take away 400 will leave us with net assets of 3,595. That wasn't very neat. Let me just write that again. 3,595. Cool. Once we've got our net assets, we're going to move on to our equity column. So I'm writing equity up here and underlining it. And from our booklet, we found that our opening balance was worth 1,625. We're now going to add our profit for the year. Now our profit for the year, if you remember, is what we worked out in our income statement just a few minutes ago. So if we scroll back up, we can see our profit for the year is £2,070. So I'm going to scroll back down. So 1,625 plus 2,070 leaves us with 3,695. But we're still not quite finished. What we're going to have to do is take away our drawings. So this is what the owner of the business does. They'll take drawings out, and that's going to be what they use for personal use. So we're going to less our drawings. Now looking at our worksheet, our drawings were £100. So 3,695 take away 100 will leave you with £3,595. And that is you completed your statement of financial position. Once you've worked through this teaching exercise, can I get you to complete 10 onwards?